Welcome back to Business by the Books. Let's face it, you started your business because you were passionate about your craft, excited to help others, and dare I say, maybe even change the world. As time has gone on, you find yourself burning the candle at both ends. You've stopped caring for yourself, your family sees you less and less, and the work is starting to pile up. Now, you can feel two things at once: grateful for the growth of your business and exhausted trying to keep up with everything you are juggling. Imagine if you had a team of people helping you in your business. Take a few things off your plate. Give you the time and space you need so you can fall back in love with your business and your craft. You're listening to Business by the Books, the podcast that teaches you how to use your financials to manage your business. My name is Danielle Hayden, CPA and founder of Kickstart Accounting Inc, where we use bookkeeping as a vehicle to help business owners take control of their numbers. And I've helped thousands of business owners make informed financial decisions for over a decade. Today, we're going to be diving into a vital question. Can I afford to hire? Pause. Don't let the stories in your mind start running. Can you afford to hire? So in this episode, you can look forward to learning the Kickstart Accounting Inc. framework you can implement in your business to help you determine if you can hire. No more making business decisions based on your gut. Let's use the facts and figures. The exact number that you should have saved before making your next hire. And you'll get to hear how I've implemented this strategy over and over again here at Kickstart Accounting Inc. and how we use this strategy with our clients. So if hiring is part of your 2024 growth strategy, then stick around to this episode and series of Business by the Books. Now, I'll never forget the first time that I went through this as a business owner. I started Kickstart Accounting Inc. 9 years ago, which is absolutely crazy to me to even think about. But I specifically remember the moment, those crossroads, where I was scared as heck about hiring my first few team members and embracing that growth journey. Now, I was a single mom of 2 young kids at the time, and we were living at my old house. And this house was one of those houses that had the awful paneling. And as soon as the heat turned off, it was instantly freezing, like right away. So I'm sitting at the dining room table, bundled up in blankets, because as a single mom of 2 kids, trying to launch a business, every time I heard that heater turn on, I heard ching, cha-ching, cha-ching, cha-ching. So I sat in that quiet dining room after my kids went to sleep, all bundled up, listening to the heater roar. As I sat there, my stomach kind of ached, my palms were clammy, knowing that I needed to make a business decision. See, I was a solopreneur at the time. I had a few admin team members helping me here and there. But as a solopreneur, I could only take as many clients that I personally could service. So I was really trading time for money. And I knew from day one that I wanted to make an impact. I wanted to help entrepreneurs across the United States. I wanted to help women in entrepreneurship understand their numbers, right? Like I really wanted to make an impact in my community. I really wanted to make an impact to other women. But if I only could ever serve the small handful of clients, I would have my own lid. I would not be able to fulfill the bigger mission that I knew in my heart that we could accomplish. Now I sat there in that dining room at the crossroads of hiring my first team member and hiring a consultant who was going to help me grow the sales side of my business. Now, I want to fast forward because Sarah was one of our first team members, and Sarah still works with us today. So huge shout out to Sarah. And I could have never even began to imagine the impact that we make here at Kickstart today. Being able to work with thousands of entrepreneurs. We have a team of 25 women and a culture of support that I couldn't even have dreamed at that time. But I needed to find the courage and the confidence to make this decision. Now, I know that numbers are, for me, one of the best ways for me to calm my anxiety and to be able to confidently make business decisions. And that's why I teach this stuff to you guys. Because if we're always making decisions based on our gut, then we are able to allow fear in. Where if we can make business decisions based on data and facts, we can find the courage and be courageous business owners. All right, so what is this framework that I used in that freezing dining room 9 years ago? I have 3 methods for you. The first method is the simplest method. This is the look back method. Now, I want you to go to your accounting software and run your profit and loss, also known as your income statement, by month for the last 6 to 12 months. Now, I say 6 to 12 because if your business has rapidly changed, which let's face it, in entrepreneurship often happens, maybe you only run this report for 6 months. If your business has been pretty consistent for the last 12 months, I'd rather you have a full annual picture to look at. So I want you to export this report into Excel. You don't want to actually input anything into QuickBooks that is not cash transactions because we want to make sure everything is squeaky clean for the tax accountants at the end of the year. So we're going to export this from the system to have this place for analysis. Now you're going to really simply add in the monthly cost for your team member into that Excel document. What I want you to be able to see is if you would have had that team member for the last 6 to 12 months, what would your profit have been? What would the impact have been on your cash, your profit, and your owner's salary and draws? So this is method 1. Method 2, we call our averages method. Now, if you want this worksheet, you can go to kickstartaccountinginc.com/hiring to download this worksheet. If you're going to do it on your own, you can use that same export, the profit and loss for the last 6 to 12 months, export it into Excel. And as you see the total column, I want you to insert another column, and you're going to take the average revenue coming into your business. So it's cash in. What is your average monthly income minus your average monthly operating expenses? There's 2 more. Minus your average debt payments and your average owner's draws. The purpose of this calculation is to find your monthly cash outlay. Now, if this number is positive, it gives us a guide to be able to see how much we can afford to pay our new team member. Now, if this number is negative, meaning you are not creating on average a profit in your business, that's okay. I don't want you to get discouraged. That just means we have a lesson to learn. We need to dig into our financials to find out why we're not profitable. Are we not charging enough? Are we spending money in areas that don't align with our goals? Do we need to cut operating expenses, facility cost, other payroll costs, right? So look at where you are spending money so that we can start to bring this number back up to positive, back up to profitability. So again, there's nothing wrong with saying, I can't afford to hire somebody today, but I'm going to take specific actions to know what number. I'm going to take specific actions to get there. And now I know what number I need to be at. So we want to make sure that our averages are positive. All right, next is our look forward method. This, ladies and gentlemen, is our advanced method. This is the process of building a budget. Now, I love building a budget. My operations manager and I just took 4 days out of town in a quiet conference room where we just focused on strategy. We needed to reset our 10-year, 3-year, and 1-year strategic goals and really map out how we were going to achieve those goals. So during that time, we mapped out specifically what were we going to be spending in advertising and marketing? Specifically, what are we going to be spending in our salary costs? So we know exactly how much that we are going to be spending in order to hit our revenue goals. So I love using the budget way back when and still today, because this is the tool that's going to allow you to build in those scenarios for the future. So when you build a budget, you are forecasting your revenue for the next 12 months. You are looking forward. And this can be done using averages and seasonality with a percentage of growth. So your budget doesn't have to be anything sophisticated where you're saying, I'm going to sign 5 clients at an average of $5,000 per client, right? Like you can get detailed, but I want to give you permission to stay at a high level when you're building the budget. The idea is to get a guide to where you want to go. If you are working with the Kickstart Accounting Inc. team or another bookkeeping and accounting team, that is when you can build a really sophisticated budget. That's why we offer our CFO services at Kickstart Accounting Inc. for our clients who want to have that partnership where you're looking at the budget every single month, looking at the budget to actuals. What happened this month? Did I hit the numbers I thought I was going to? And what do I need to change moving forward in order to hit my forecasted numbers in the future? I don't want to get too far down a rabbit hole. So it's really meant to be a guide to help you determine if you can use hiring as your growth strategy this year. So again, we have those 3 methods. Our simple method is our look back method. Our middle tier is our averages method, which is going to allow us to find our break even number and then be able to plan our reinvestment with our profitability. And our most advanced method is to build a budget. You can get those downloads at kickstartaccountinginc.com/hiring. We'll get back to the show in 1 second, but real quick, are you an entrepreneur or business owner struggling with the complexity of tax deductions and salary structures for yourself? It's common to feel lost in the maze of tax regulations and unsure about how to effectively pay yourself from your business. Navigating these challenges can be daunting, leaving you with more questions than answers. But what if there's a way to simplify this process, ensuring you maximize your deductions and set up the most beneficial compensation strategy for yourself? That's exactly what our guide on the top tax deductions for every business owner and how to pay yourself as a business owner are for. These resources are designed to demystify the essentials, helping you understand and leverage tax deductions and outline a clear, effective strategy for your salary as a business owner. Through these guides, you'll learn the key deductions you shouldn't miss, strategies for tax-efficient salary and owner's draws, and much more, ensuring you're financially optimized and compliant. So if you're ready to take control of your financial health with confidence, head over to kickstartaccountinginc.com/gift or click the link in the show notes and download your free resources today. Okay, back to the show. All right, what is the exact number that you need to have saved before you hire? Because people ask me all the time, I'm scared. I'm scared to be responsible for this person. And look, guys, I absolutely get it. I understand. And I appreciate you for wanting to act responsibly, because it's our job as CEOs, as business owners, to be responsible as we take on new team members, relationships with vendors and clients. So we have, again, 3 options to determine your cash reserves. The first option is to have 1 to 3 months worth of your cash outlay. Now, remember we talked about your cash outlay in the averages method. This is your average operating expenses plus your average owner's draws plus your average debt payments. This is the total amount of cash that you spend on a monthly basis. And it's really important that we include both debt and owner's draws. We can't just include our operating expenses. Again, accounting hack is the debt payments and owner's draws are on the balance sheet. They're not on the income statement. So we really need to make sure that we have that full calculation. Now, you might be more comfortable with only having 1 month if you know that you have 1 to 3 months worth of committed revenue. So that's option number 2 is 1 to 3 months worth of committed revenue. Now, I'll be honest, guys. I did not have 3 months worth of cash outlay when I hired my first employee. I knew that I had committed revenue. So we had closer to about 1 month worth of cash outlay. And then we knew that we had ongoing committed revenue. And so that we could take that risk in bringing that team member on and continue to grow from there. So there is a decision for you as a business owner that you will need to find your risk tolerance. So between 1 to 3 months worth of the cash outlay and then 1 to 3 months worth of committed revenue. The third option is 1 to 3 months worth of your new team member's salary and onboarding costs. A lot of our clients will say to me, I just would feel better knowing that I had the money set aside and I knew that I could pay this person regardless of what happens in the business. And again, I appreciate our clients for wanting to care for their new team members in such a meaningful way. Now, when we hire our new team members, let's face it, it is not just paying them an hourly rate. First, we have to find the team member and then we need to onboard them. So when you are finding the team member, there's a few costs to think about so that you can have this amount saved as well. And you can go to kickstartaccountinginc.com/hiring to download this whole worksheet. So before we find that person, we will need to create a job posting. Think Indeed, ZipRecruiter. Now, I know from hiring a team of 25 people, we've done a lot of hiring over the last 9 years. Most positions, in order to get good applicants, really need to be advertised on Indeed or ZipRecruiter. So you'll need to have the cost for advertising that position. Now, I know Indeed does have an applicant tracking system built into Indeed. However, we use a system called HR Breezy to actually sort through our applications. So there might be some costs associated to an applicant tracking system. Once you find your new team member, it's time to get them onboarded. I suggest having a cost set aside for performing a background and credit check. You might also have things set aside, such as a referral fee or sign-on bonus. So I know some people in really difficult to find positions might offer a sign-on bonus or a referral fee for somebody who has helped you find that new team member. Then we need to train our new team member. Even if we hire somebody who has amazing experience, we still need to train them on our standard operating procedures. We need to train them on our framework. So here at Kickstart, we have a whole training where people are in training for a week or so. So we want to have the cost, the hourly rate of that new team member. We want to have those training costs set aside. All right, lastly, we need our equipment. So think computers, monitors, keyboards, and accessories. Now, you might also consider doing something really special for your new hires. Maybe you're sending them flowers or a swag bag, something really kind and considerate on their first day. So we just want to have those costs included as well before we start looking for that team member so that we can have this money in savings before we start hiring. Now, once we have onboarded our team member, we've gone through all of our one-time costs, we have our ongoing costs. But just a reminder, guys, it's not just their hourly rate. We need to be prepared to pay payroll taxes, workers' comp, and payroll fees. So on top of just their hourly rate, we need to be prepared for those other costs in having this team member onboarded in your company. Now, lastly, I just want to touch on benefits. If you are currently offering benefits to your existing employees, then you might want to consider having enough money in savings for 1 to 3 months worth of health, dental, 401k, and any other fringe benefits that you might have, such as cell phones or gym memberships. Now, a reminder, you do not have to offer health insurance or 401k for a part-time employee. So consult with your state before making that determination, but you do not have to offer benefits to your new part-time employee. Now, here's a cost that has snuck up on me throughout the years is the software and other costs associated with bringing on team members. So my team is probably going to laugh as they listen to this. I try to be really, really conscientious and slow about adding new software into the company because we have a team to think about that where we are paying for every single user. Now, this is funny because I actually love trying new software and I have to really dial it back when I want to launch new things because not everyone loves change the way that I do. So I want you to think through, what are the software tools that you're using in your business? Because as you add that team member on, there's going to be additional cost to that software that you're going to be paying on an ongoing basis. Now, remember, this is a guide. These are a set of tools that you can use to find and commit to the numbers that your business is going to need in order to bring on this new team member. It is not meant to give you hard and fast rules or to scare you in any way. Hiring my team has been one of the most amazing things that I've ever had the privilege of doing in my life outside of being a mother. So I encourage you. I want to remind each and every one of you that you have the ability, you have the confidence, and you are a business owner. You are an entrepreneur. You are one of the courageous people who have the ability to take this next step in growing your business. So use the tools that we have laid out at kickstartaccountinginc.com/hiring. Contact your bookkeeping team for help and support with these resources and go out and hire your next team member. Now, we will be back next week with all the KPIs that you need to monitor as you grow your team so that you don't let these costs get out from under you. So don't forget to hit like and subscribe. We will be back next week with all the KPIs you need to know. I have a favor to ask. If you have gotten any value from this show and you want the show to continue to grow and keep providing you with strategies for financial growth and efficiency, simply leave us a rating and review if you're listening on Apple or Spotify. Those reviews really go a long way in attracting more listeners, and honestly, they really make my day. So if you're feeling up to it, we'd love to see a rating and review from you. Either way, thanks so much for listening to the show.